tells me that there's downside risk to 55, 56 range. So it generates what's called a failure to succeed signal in here and allows you to lock in your profits. So I'll pull over the numbers here. And what we did is this is a failure to succeed pattern. Today is the 17th day, so that will be updated for tomorrow's trading. I had an upside forecast on 4.7 to $60.
I mean, yeah. I mean, look at your call on just looking at your notes there. Look at what you said on March 17th.
Indicates upside reversal and technical breakout to the 60 range. Okay.
So on the 17th, let's see, where was that thing trading?
March 17th, it was right here. So here's the 16th. And this right here, this pattern right here, this is the dominant body of water, the blue line, and the green line is the small little stream. Is it really going to affect the impact of that? Not really. This is the result of the convergence of that body of water. Now the dominant river comes down, and it can't, there's no reason for it to break out to the upside yet because the convergence hasn't taken place. But it's forming. There's a gathering. There's a consolidation period. And this is part of the art of Pro 17. The math is already telling me what to do. Now I've got to determine where's the art part. So you're a buyer back at the 53 to 55 range. Actually, 55 right now is the buy price. So I put a short at 60 on April 7th, correct?
Yep.
And that would be the day before it peaked. So that the very next day it peaked at 61, and the failure took place. So you could have shorted it anywhere from 60 to 61 that day and been sitting on a $3 profit.
So, Todd, where do you see this going now?
I think it still has some downside pressure in it. This shorter-term behavior is causing a failure to fail. So visually, what market makers and traders will see, they go, oh, this is at the top right here. I'm going to put my buy orders in at 57. That's a behavioral shift. So what can happen right here is we can have a failure to fail develop at $57, and then it's going to retest 59 and higher. The more times it closes at higher price than that, the faster this accelerated convergence will take place. And that will create another failure to fail and an upside breakout. So we're within the next 3 cycles, this most likely, based on current market conditions, will generate a positive convergence and a positive breakout to some new level. And
So if you're updating the forecast today, you wouldn't reiterate your short call.
I couldn't add to the short position right now. It's achieved pretty much what I thought it would achieve from a behavioral standpoint. This is the longer term picture. So at these critical points right here, this is called a triple convergence of behavioral patterns. And the slope is already shifted positive in the long term. So a lot of people are saying, well, the negative trend here will drive the stock down. Well, it might, but only to a level where it gets picked up. And it gives you the ability to now come back into this range of the market 3 to 4 months out.
Okay.
So if you can buy it at 55, great. But if you're short at $60, you're looking to lock in profits sometime in the next 2 to 3 days. So that's the 5th day of the down cycle. That means there's 2 to 4 more days of downside pressure.
So things don't change for you if it crosses through the 17-day, maybe only if it crosses through the 50.
55.
Right.
It would have to cross through 55 for it to generate a sell signal. And it would have to sustain below 55 for a couple days before it would do that.
Okay. Very good. Can we pull up SNDA?
Okay, I think I did this one.
It's been a while on that one.
I think I just did this the other day.
Oh, okay. I show March 23rd.